Hey everyone, welcome to SumZero. Today we have Eric Gregg, winner of our most recent quarterly community contest. Eric's a longtime SumZero member. He's contributed many pieces to the site and has consistently outperformed. He's currently he's in the top 30 of our all-time analysts in terms of overall ranking, which is based on idea performance. And he's also the founder of Four Tree Island Advisory, which he's been running for many years. Eric, it's great to have you on SumZero. Before we get into Willis Lease, which is a jet engine leasing company, would love to hear about, just quickly on your background and your firm. If you can maybe intro that first.
Great. Thanks, Divya. And I think SumZero is a great platform. I'm happy to be able to be a contributor and get to know everyone I've known through being a contributor on SumZero. Four Tree Island Advisory started taking on money in early 2012. As a background, was a reformed investment banker, worked at a number of investment banks for over 15 years, and spent a lot of time in my last number of years helping advise the C-suite executives on how to create shareholder value for Credit Suisse. And thought, I've done enough of the being an agent. Let's go be principal out here and let's go start managing some money and use what I'd learned kind of from background, starting in credit at Goldman Sachs all the way to what I was doing at Credit Suisse. And applying that to managing money. So we manage about 170 million as of the end of July. Since inception, we've had some pretty strong performance, and we have a real kind of bottoms-up focus. Put all your eggs in one basket. Focus on that basket very fastidiously. Concentrated strategies. And with a real value and GARP kind of orientation, and really focusing on kind of time arbitrage, if you will, where we think there are big dislocations that should collapse over time and drive superior performance for our investors.
That's great. And for those of you listening or who do hear this recording, Eric was one of the most bullish people on the semiconductor industry, and there were a number of names, like including Lam Research, that I know you've written about on SumZero that have performed extremely well. And I think you had posted a lot of that research before the CHIPS Act. So anyway, kudos to you on those on those positions. So let's talk about Willis Lease. This is ticker WLFC. Eric, how did this hit your radar? And were you running some sort of financial screen, or was it something else that kind of alerted you to the opportunity in the industry, because it is a niche, obviously?
Yeah. So we, as you know, I'm sure, Divya, and anyone who's followed some of the stuff I've written on SumZero, probably the one idea I've written most about on SumZero over time, just because it's been beaten up so frequently at various points, and I had to come to defend it because it's so crazily undervalued, is AerCap, which is the largest commercial aircraft leasing company. And we could talk about that one all day long as well, but I'm incredibly bullish on the setup there, and never been more bullish, frankly, than I am right now. But there are a couple of times along the way, including during COVID, where that stock, had an existential kind of crisis that hit it, and have stayed very close to the industry. Always, Willis was out there as another aircraft equipment leasing company, but it had some characteristics at the time, when I looked at it and just gave it a cursory review, that made it less appealing. It has shorter lease lives. The engine business I didn't really understand as well, and it's just something that it was so small and kind of nichey that I was like, let's stay. The aircraft leasing business is enough a niche industry. Why even get even more niche by going to the engine business? This really started gathering my attention over the last few months, and the aha moment. AerCap did a capital markets day back in May, where they by virtue of buying the second largest aircraft leasing business that also had the largest jet engine leasing business as a part of it, being GE's GE CAS business. They came out on their Capital Markets Day, and right out of the gate, we're talking about how important jet engine leasing had become. And it was the most acute need area in provisioning of basically flight services. And how they were effectively being able to use their ability to place engines that were in such acute need to drive more aircraft leasing, that it started making me say, hey, wait a second, I need to go back and look at Willis Lease Finance. And as I started looking through, and there was also this crazy situation where there's this other company in the space that I, frankly, until a few months ago, I never even heard of, called FTAI, which is a Fortress-based vehicle that is also a jet engine leasing business. And Willis, when I started looking at, was trading at about 6 times earnings, and FTAI was trading at about 30. And it made absolutely, seemingly no sense. So I started digging in a bit more. There is some subtlety and some potential reasons why that's the case, but I think they're way overdone. And the thing that really captured my focus was not just how much AerCap was pounding the table about how important their jet engine leasing was, but as I looked at Willis, I realized it was basically a pure play on jet engine leasing, A, and B, the dynamics that are so strong in the aircraft or just basically flight equipment leasing industry right now, they're going to take a number of years to play out for the bulk of AerCap's business. So they're basically in a hard pricing cycle, and because the average lease life for AerCap is 7 years on their portfolio, it's going to take kind of 7 years for that whole portfolio to reprice. But what became very clear to me quickly is that Willis, they're in a hard cycle right now, an incredibly hard cycle for pricing of their leases, and it might take 6 quarters or a year and a half before their whole portfolio of leases is repriced. And what this is leading to is explosive growth in their EPS. And so it's not only incredibly cheap, on a PEG basis, it's like 0.1 because of the type of growth it's getting in its EPS growth. So why don't I stop with that? And,
that's really interesting. I mean, so just on the sort of basic financial metrics, what's the rough market cap of the company right now?
It's about $550 million, something like that.
Yeah. So no sell side research coverage, I imagine, or
That's right.
minimal.
None.
And as you said, it's like a niche within a niche. On the lease terms, I think that part's interesting. You mentioned in your report on SumZero that the average lease is roughly a year and a half, whereas in the aircraft leasing industry, it's 7 years. Why is that? I mean, you'd think an engine should last 30 years or something like that. What's the sort of reason those terms are so short?
You are right. I mean, in fact, engines last longer than planes. There will be planes that are very close to where the frames are sufficiently stressed that the only value on the plane is the engines that you can take off of that plane. And that's, in fact, it just came out recently that AerCap said that a lot of the sales they're making of great older age planes are really just for the engines. It's not even for the frame of the aircraft. But why are the leases shorter? I think it's for a lot of reasons. Think about all the things that can happen to an engine. I mean, you have a bird strike and an engine goes down. This happens, unfortunately, and you need a new engine to get off those planes. So when you're looking at those planes and you're looking out on the wing and you're seeing those engines, those aren't things that are fixed and always the same engine on the plane. Those engines come on and off those planes with regularity. They need to go through normal maintenance, and then sometimes they need to go through longer overhauls. Or if you have one of the acute problems in the industry right now is there are a lot of engines that were made by Pratt & Whitney called the Geared turbofan engines that all need to be reworked. And those take about a year to rework because it replace them with more sturdy and competent parts. So those engines come on and off, and a lot of times the airlines don't know how long they're going to need the replacement engine to keep their plane up and running. So these are typically lower lease life situations. But I also think Willis, who's an incredibly savvy operator, has been shortening up its lease lives. So you've seen that over the last, and in the disclosures that they provide, because they know how strong the market is right now. So the shorter it is, they can give, that much more profitable terms to themselves and give themselves that much more optionality in an incredibly strong pricing environment, either to sell or release at even higher rates. So these are some of the reasons why I think the leases are short.
Would the major carriers like the Delta and US Air rely on a Willis in the event that you mentioned a bird strike, or if it's just like they need to replace an engine for whatever reason, and that engine needs 5 months of maintenance or whatever, that they would then lease an engine from Willis?
Absolutely.
Is that a typical use case?
Absolutely. I mean, I think any airline that I've seen estimates that airlines need to have kind of excess coverage of engines to the amount of slots on planes that need engines of something like 7 to 8%, just to keep the global capacity flying. And if they don't have those extra engines, or they don't have them in the right place to swap out with an engine that needs to be worked on, that plane is down. It's a big piece of metal on a runway, not generating revenues in an industry that has forward sold tickets and needs every bit of revenues they can, because we know the challenges the airlines typically have.
And do most airlines have sort of backup engines lying around in hangars that they can just quickly swap into? I would assume not, but I'm curious what.
I think this gets back to how strong is the airline. So I think a place like Delta, which is one of the strongest operators and has one of the best credit ratings out there, they're probably going to have a better coverage of excess engines that are going to be around, waiting to be leased. I mean, or waiting to be used when they're needed, right? But if you're an airline that's going through distress, okay, you are going to be more reliant on the lessors, because you are not going to want to have that excess capital caught up in engines that are on the side that, if you aren't using it that day, that's just excess capital being, on the side being, taken away from a distressed business. There's also a dynamic Willis talked about on their last call, that when the industry is going through any kind of challenges and stresses, which happens in the airline business all the time for various different reasons, it's one of these things where they can't seem to not put their foot in a muddy puddle. They're less likely to stay on top of all the preventive maintenance that they're supposed to do on their engines to keep them up and running. And when they don't do that, they're going to break down more frequently. And when they break down more frequently, you're also going to need to go lease those engines to, help you through that period. So, curiously enough, during periods of stress for the airlines, actually the leasing of engines demand probably picks up even more.
And how many players are in the space that are in this leasing, in the leasing space?
Well, of the public players that I'm aware of, and I'm not talking about stuff in the Far East or Europe that's not on my radar. I mean, this is a global business, by the way. So anybody who does this is leasing all around the globe, typically, these engines, because that's planes fly all around the globe, and it's a global market. But the three are AerCap, Willis, and FTAI, which are the three public companies. I'm sure there are private lessors that do a small number of engines or something like that. This is such an attractive business that I'd be surprised if there weren't kind of mom and pops to a certain extent. But I also think this is a highly regulated industry, that being flying aircraft in these airlines. And I would suspect that the big guys who need to lease engines would rather do it with public companies that have strong reputations, that have been in the industry for a long time, and have better financial resources. So I would imagine those three. I've never seen an industry piece done. Again, this is so niche-y. And again, there are no sell-side analysts who cover them, but I would imagine those three account for a large bulk of the industry.
And is AerCap in both aircraft leasing and jet
Yeah.
engine leasing? They do both.
Yes.
Okay.
Yes. But
And
if you look
yeah.
at their revenues or as a percentage of revenues or as a percentage of assets, even though AerCap is the largest jet engine leasing company in the world, they are far and away more tilted towards aircraft leasing than just jet engine leasing.
So just from like an M&A standpoint, I mean, it would seem like Willis is an obvious target for AirCap or the other player in the space. I don't know what the regulatory sort of antitrust considerations are there, but has that been sort of talked about a lot? Some kind of combination?
So I think it's a tremendous takeout target. And the obvious acquirer for them would be either Air Lease that does no commercial aircraft leasing, or I'm sorry, which does no engine leasing, or maybe FTAI, which is the other, biggest kind of pure play engine leasing company, if you will. They do more planes, and they also have an MRO, which is a maintenance repair organization, which basically services all the planes and the engines and stuff like that. So, but I think they could, it would be incredibly accretive for them to go and buy Willis Lease Finance. I don't know really how much antitrust there would be. But Air Lease would have no overlap issues and would be very straightforward for them to do it.
And you mentioned, I think it was FTAI that trades at 30 times earnings, and
Yep.
Willis is at 6 or something thereabouts. How would you explain the gap? I mean, what is there a reason for the valuation discount?
Yeah. So, and just to, Willis was at 6 when I was first starting to look at it. It's actually gotten cheaper, even though the stock price has gone up, based on how much more explosive the earnings are than I really anticipated. But let's get to that in a second. Answer your question. So FTAI has two elements to its business, and it also has a stock story. And it's been much more out there in the community telling its story, and that's benefited them enormously. I think it's actually, in fact, I've seen, I think at one point I saw an article recently saying it's maybe the best performer in the Russell 2000 over, year to date over the last few years, something like that. And it's been a huge play for a lot of, small cap managers. And the momentum has been so great. I think a lot of people have been unwilling to sell it because it's just been a one-way trip. But in terms of their business, they do have something that's very special, which is their MRO business. And it's about 40% of their EBITDA. And they figured out a way. So we're having all these engines that need to go in and be rebuilt or go in for repairs. And there's two main things going on now. There are all these geared turboprop engines that I talked about. Engines are about 3,000 of them that are over the next number of years, need to be rebuilt. And that's taking a ton of MRO shop capacity out of the market. And then there's also something called the CFM 56 engine, which is a product between GE and Safran that is the kind of the workhorse engine in the industry. It's the most prevalent jet engine in the industry. And the bolus of those are coming off of their guarantees. So they need to all be going in for shop repairs as well. And on top of that, you have another issue, which is basically during COVID, the MRO shops were getting no business. They were getting very little business because not a lot of planes were flying, and airlines were trying to save money because they were just running on fumes. So a lot of these MRO shops shrunk, and a lot of the talent that was running those MRO shops left the industry or were performed in those places. Now the need for MRO shop visits has never been greater between all these issues I just talked about. And what FTAI has done is they figured out a way to make modules so that when you go in and you need, with certain engines like the CFM 56 engine, and need to go through an overhaul, they can do it quicker, they can do it cheaper, and they can do it with very high profitability. So it's been this way for fundamental investors to say, we understand that the acute need for turning around service shop visits and how great the demand structure looks like for the next number of years. They have a better mousetrap, so we're going to get behind this and play this out, because we think the growth is going to be very strong for the next number of years in MRO shop visits, and they just have a great way of going and doing it. So that is what's really driving, if you want to say there's a rationale for why the stock is trading in the 30s. But if you want to, where this ultimately should go back to, Willis can do that stuff too. They know how to do modules and how to go and replace and fix engines in that same manner. And that's not being appreciated by the marketplace. And they even talked about that on their most recent earnings call, which was the first earnings call they've done in forever.
Yeah, and just for listeners, MRO refers to maintenance, repair, and overhaul, right?
Yeah, overhaul, yes.
Okay, so right now, how big a piece of Willis's business is that?
Well, they don't break it out the way that FTAI does, okay? But what we do see is explosive growth in their basically their maintenance revenue structure. So the way Willis has been constructing his leases is there's a base lease rent, and then there is basically a part that's based on usage of the engines. And that's what's really been exploding in terms of the revenues on the balance sheets. The base lease rents have been relatively consistent. They've gone up modestly year over year, but they're clearly charging a lot more for the amount these things are being used. And I think this is how they're incorporating their service element within their business into that maintenance rent structure. So you can't really compare on an apples to apples basis.
Now, on a related note, there's been a lot of talk recently about recession fears, and people are always trying to predict the next recession. People think of airline travel as a somewhat cyclical, macro-dependent industry. How much of that do you see as a risk, and how do you think the company thinks about the macro environment in terms of its business model? It seems like the maintenance piece might be kind of the answer to that, but I'm curious what your thoughts are.
So this is where just understanding the industry and seeing and following AerCap so long and is really, I think, kind of helpful. If you look at long-term trends in passenger airline miles flown, it grows at a mid-single-digit rate very consistently outside of periods where you have exogenous macro events. So obviously COVID, right? But what we've seen, something like that, or 9/11 or something like that, where it just immediately, or SARS, you see these things, but typically what you do is you have a dip and then things go back on track again. And in fact, if you look in the US market right now, we're back, we're up 5% again this year over last year. And it really, if you think about the long-term dynamic, a lot of the world, especially in Asia, there's just a lot of people who've never flown before. And if you believe the whole world is moving, gradually towards, middle class, or a lot of the world is, and they want to have the opportunity to travel more, and their economies are becoming more developed, there's going to be more plane travel, whether it's, Asia is a big dynamic for this. So, and then you have, just the desire to do it for, just naturally anyways. And so even in the US, where we don't have, it's not a developing country, but demand has never been stronger right now. We're dealing with, I guess TSA numbers broke over 3 million for the first time in a single day back about a month ago. So I think demand is going to continue to be up and to the right. And there are certain regions, if you have economic issues, you can see things slow down a little bit. But generally, this is an industry where you're going to keep on seeing growth. And so you're going to keep on needing more and more equipment to service that growth. And the challenge is, we see it almost every day in the newspapers. The OEMs cannot get enough of this equipment out the door. There are production issues on both the aircraft and on the engines. And this geared turbofan engine issue, you really can't emphasize enough how much of a setback this has been for the ability to service the need for more engines, because there's just a real incentive for Pratt & Whitney first to worry about keeping those old engines and getting them back up and running, and then secondarily working about getting new engines out the door. And the geared turbofan engines are focused on the most in-demand aircraft in the world, which is the Airbus A320, A321. They need to just, it's created a real shortage of supply in the engine industry, even as demand keeps on increasing.
Tell me about the founder and CEO, Charles Willis. Just your overall thoughts on management.
He was a visionary. This is his company. He started it about 40 years ago. He has created a very, very good business. The challenges there, and that I think is remarkably undervalued by the public marketplace. The challenges are twofold. One is it's basically a family-run business, out there in the public markets. So between himself and his son, who's the CEO, the founder, Charles Willis, is executive chairman, and his son CEO, they own about 56% of the company. I think there have been times in the past where they haven't really worried about courting Wall Street, and that's an opportunity that FTA took. They come from more of a traditional private equity background, and they realize the value of when they're in the sales mode of selling their private equity asset stakes in that business, making sure there's a strong story out there in the marketplace. Willis has not been a seller in that same way. And so they've kind of been quiet and doing what they've been doing to generate incredible value in the business, but not communicating it as well with the street. And that's changing. So that's a good thing. So that's there's the family element to it. And then in the past, we've seen, as a family business and as someone who rightfully, built this thing from the ground up, at times his desire to maximize potentially the value for him or the family over maybe public shareholders. And so that's a tension that you have to get comfortable with, although I think it's a tension that could resolve itself in a very positive way over time. Because I think right now, I'd be very surprised if there weren't a lot of people with sharp pencils thinking about how to create more, to get at the value in this business.
Are there any activist shareholders in the mix?
Not that I'm aware of.
Yeah, I mean, it just seems so under the radar, which we love on SumZero. This stuff is like exactly why I think people come to the community in the first place. But
I've talked to activist investors that are you aware of this? And I think one of the challenges is between the largest shareholders who are public and then the in the family, I would say only about a third of the stock floats. And so 35% of it really floats out there. So on a $550 million company, you're talking about maybe $200 million or roughly of the stock that's actually purchasable. But I think this is, there's just so much value here. I don't know why this wouldn't be attractive to people out there. You're gonna have to take some time building a position and then trying to work with the family to even generate more value.
Yeah, and in terms of catalysts, what would you say? I mean, obviously the earnings are probably the biggest one, but do you see any catalysts in the next 12 months or 2 years maybe that could sort of expand really get the narrative in front of more shareholders and really drive the stock up?
Well, as I alluded to, they did their first earnings call in known memory after this past earnings call, or after this past quarter. They're generating a ton of cash right now. As of year end, if you look at the 10K, which was published in March, they talked about how they never foresaw any likelihood of ever issuing a dividend. Then after Q1 results, they announced a special dividend of $1. And then with Q2 results, they announced that they're going to a quarterly dividend of 25 cents. Even though in Q2 they did over $6 in earnings, and in Q1 they did $3 in earnings. So what I'm getting at is there's a ton of cash being generated here. Earnings are highly likely to go higher. It could be lumpy based on whatever sales of engines that they do, but there's enormous value in their engine portfolio if they want to be selling any assets. So I wouldn't be surprised if they came out, the best value they create for shareholders would be going and doing some modified Dutch auction tender type stuff, where they came forward and offered to buy, let's say, 5% of the stock outstanding or something like that in some kind of stock repurchase program, and do those selectively going forward. I wouldn't be surprised if we saw something like that, given how much cash they're generating right now. It would also help management even get more control of the company, or the family getting more control of the company. But earnings, being more open to going to investor conferences and doing these earnings calls so they can get institutional investors more comfortable with the company. And then, I think there are just a number of different strategic things that could happen here.
Yeah. Eric, it would be really interesting if you did a call on SumZero with the CEO. I think a lot of folks would tune into that. I don't know if you've met him or know the guy, but or the chairman. I mean, either or both. It would be super interesting. As far as risks, other than macro, what do you sort of see as, like, what are the things that keep you up at night? In terms
I mean, there are the good risks that the Charles Willis is actually on multiple occasions tried to take the company private at too low a price. He could come forward and make another bid at, let's say, 100 and whatever you could call it, 125 a share. That would be dramatically below what probably the fair value is for the business. But a lot of people would be fine with a $25 premium, or 25 or 30% premium. And so that's not really the kind of thing that I worry about too much at night, except for when you find something that you think is worth a lot more than what you might get for it. That would be fine outcome, but not a great outcome. The bigger risks are COVID, another global pandemic, that something comes along that massively reduces demand for air travel. And they've done a pretty good job of explaining if it's just a normal kind of mild recession, or their services might be even in greater need. Maybe they won't be able to sell as many engines at high premiums, but the demand for their engines should be higher than even now, because people just aren't going to be able to do all the preventive maintenance they do on their engine portfolios, and so they'll need lease when they need an engine. So anything that dramatically cuts the demand for air travel, you would think would play through on demand for their engines. But I that's about it.
Do you own the stock outright, or is this a pair trade for you? What's your kind of?
No, I own the stock outright, and I just don't do a lot of shorting. I mean, the challenge, the obvious pair trade here would be to, or there are a few obvious pair trades, I think, but one would be to short FTAI and go long Willis. The challenge there is there's just so much momentum in FTAI, and it's a much more liquid stock, and so that's the challenge there. But I'm just outright long.
And just curious, has Willis sort of been trading in this valuation multiple range, like let's call it 5 to 10 times earnings for most of its public life, or like where are we now in terms of its?
I mean, this is at the low end of the range. You could argue, if you thought there was a lot of efficiency in looking at this company, that what the market was basically saying is they thought that in this dynamic of the acute need for jet engines was going to be very short term, and that it was unlikely that this was going to sustain. I see no reason to believe that. In fact, when I first started doing my work on this, I said, well, at least we're probably looking at a strong pricing cycle through 2026. And I've dug deeper and I've talked to other industry players. And granted, they're talking their book to a certain extent, but they're saying through the end of the decade, this acute engine need is going to be with us, and that's going to be the biggest pain point for the airlines. In fact, the first big order of new equipment that AerCap has made in a very long time was made not too long ago when they did their Capital Markets Day, I believe, and it was for $3 billion worth of engines. It wasn't for planes, and AerCap is incredibly savvy where they put their capital to work. They're always going where they think the greatest value is going to be. And I think they realize that that is a business they want to have more exposure to because of the dynamics in it. And even when you put in an order for $3 billion worth of engines, it's going to take years before they can get them all because there's just so much of a demand for those engines right now.
Eric, this is fascinating. I think that covers everything, at least that I had in mind. Anything else that we may have missed, or some final thoughts?
I think I've more than covered it right now, but I encourage everyone to read all the comments. I've got some great questions on SumZero, and I've tried to be very thoughtful in the answers to them in the comment sections and whatnot. So anyone who's interested, I really encourage you to both read what's been written already on SumZero on Willis that I've done, and there's been others who've done some nice coverage on them as well. And then reach out to me independently if you want to talk about it anymore.
That sounds great. Thanks, Eric, for joining us. This was awesome.
Thanks, Stevie. Happy to do it.